What's going on, guys? This is Titan, aka T. If you're following me on social media, in this video, I'm going to be going over a potential market correction this week, what to expect, what we should expect, and what stocks you should focus on as far as if this correction happens or a market crash happens, what can you get into to protect your account? All right. So if you like the sound of that, please leave a like and subscribe. It really helps out the YouTube channel. And without further ado, let's get right to it. All right. So right now, the SPY is looking kind of bearish, not looking, it's really hard to, tell right now as far as how bearish it is, because we do have, a small move. It looks like we could be heading towards that 442 level. Lowest maybe 440. If we break those levels, then look for a move towards 434.98. We'll just say the psychological level of 435. So look for that level. Right now, the MACD is crossed down. And if we notice, if you guys pay attention to this, it seems like every 30 days, what I've noticed is every 30 days, the SPY pulls these moves. So here we had the SPY drop down June 21st. And then literally about 30, well, not literally, but almost 30 days later, July 20th, it did this again. And August 19th did the same thing again. So like about every 30 days, the SPY tends to drop. But this time it did come a lot earlier, and I think it's because of CPI reports this week, or maybe some catalyst that we don't know about could possibly be coming up. And, the big guys are preparing for that. So everybody's, selling their shares or stocks or whatever the case may be, getting put options in preparation for that. But this was a lot earlier. Like I said, 30 days, almost every 30 days, this move happened off the upwards trend. So just pay attention to that. I thought that was really interesting. But otherwise, as far as Monday, pay attention to the futures market. And Monday, we could see some red happening. As far as the rest of the week, really hard to tell right now, but definitely, Monday, we could be seeing some red happen. Even, the weekly chart's not telling us much. So look out for those levels. Again, I do expect a market correction. The market needs to correct. It's just been nonstop running. We've had so much bad news, and the market has yet to react to that, from, Afghanistan to the variant. It's just a lot of craziness happening, and the market just keeps running regardless. So I'm expecting a lot of things to be priced in, so it could get ugly, guys. So just be prepared for that. Got our MACD crossover to the downside. Everything's there. So right now, just pay attention to this level, okay? If at best we could see one more run for the SPY up to 460, but I honestly can't see it running any higher than that. Also, keep in mind, September is a bearish month, typically a bearish month in the market. And October is normally a bearish month in the market, at least the beginning of October. And then heading into November, it kind of gets like neutral. So it all depends on, the news and all that fun stuff. All right. So as far as stocks that you should be investing into or even trading, we are in SQQ calls. So we'll go over the SQQ first. And the SQQ just typically, to put it simple, it just does the opposite of the overall market. All right. So we are in SQQ calls. And if you paid attention Friday, like the last 30 minutes of the market, the market just started plummeting. All right. It just dropped heavy. SPY went from 450 down to 445. And during that time, we were in calls for the SQQ around $7.20, and it ran up all the way to $7.53. So we've been just, Discord group, we've just been loading up on SQQ calls. We got them for the long run, around, I think, October 15th, we got calls in the SQQ. So you definitely want to consider maybe, loading up. And this pattern here is just, it's looking crazy, okay? It's looking real crazy. So we could see the SQQ, depending on the market, just do a huge breakout. It's looking really good. We got our MACD crossing over to the upside. So we got in at a really good time, a really good price, I believe. I think we got like a $6 call, we got $7 calls, we got $8 calls. So we've just been averaging in along the way. So definitely consider adding the SQQ to your portfolio. This protects your account from a market crash, from a market correction. Just keeps you from really blowing your account or anything like that. So, you know, you may be down on other stocks while the SQQ is pretty much saving, just keeping your account at bay, okay? Just in case we get that random rug pull. And it's cheap, all right? Some people, you know, actually buy shares. Some people actually trade it. We traded it, but either one is fine. Again, it's just to hedge your account, guys, all right? Next, we have QQQ. We have puts in QQQ. Yeah, this is it. And on the QQQ, we have a bear flag, really nice bear flag. So yeah, we got in this one pretty good, really good. And it looks like it could potentially head down to maybe 375. And then after 375, we can see that move to 372 area. But right now, yeah, we have QQQ puts for October as well. So definitely consider, you know, maybe adding that, some puts for the QQQ in case the market does correct. We have puts in QQQ as well, been averaging in on those. And we also, and then we also have SPY puts as well, guys. So, you know, we got them for the long run. So if you're just going to trade these or anything like that, just make sure you're not doing it like weekly or anything like that. It's really up to you. It's your choice. But to play it safe, we did it, you know, a few weeks out. Like, we actually got into these maybe a week or two ago. And yeah, we've just been doing it for like a month out and just averaging in. All right. So definitely consider adding the QQQ. As you can see, whole bear flag. So if this bear flag breaks, we could see an even bigger move and a lot of potential profit right there to cover your account. We got the MACD crossing over to the downside. So I'm really feeling strong about this one as well. Next, we have the VIX. VIX is pretty much the same as the SQQ. It does the opposite of the overall market. Where is it? There we go. The VIX just does the opposite of the overall market as well. You want to do calls on the VIX. You know, that's up to you. But we got into some calls on the VIX as well. So when the market goes down, the VIX goes up. And right now, I think we're down on this one. But overall, again, we got it for the long run for, you know, October, I believe. We also got some November puts on the SPY as well. And I believe November puts on the QQQ. But yeah, so we're lock and loaded. And I want you guys to be ready as well. A lot of, you know, traders are not going to tell you how to prepare for a potential market correction or crash. They're just going to keep, you know, saying, oh, market crash, market correction. But they're not going to tell you what to do or how to protect yourselves from these type of things happening. All right. So that's pretty much it, guys. We do have, again, calls for the VIX, puts for the SPY, puts for QQQ, and calls for SQQQ. All right. If you don't have a big account or anything like that, I do recommend, you know, you focus more so on the SQQ to protect your account. That's probably your best bet. But if you have like a decent size account, then consider getting into all of them. It's not financial advice, just a recommendation. This is all just educational purposes and things like that. But more than anything, I would recommend SQQ. That's just me. That's what I'm doing. That's what my members are doing. And yeah, it's looking really good. We're already up on this, so I'm hoping, you know, you guys catch it before we have this crazy market correction. We do have CPI reports this week. We have like Fed news this week. We have a lot of things happening this week that could potentially, yeah, we can see some craziness this week. Okay, so yeah, this is just to help you guys out, help everybody out. Hopefully you guys get something out this video. If you did, leave a like and subscribe. That's about it. Until next time, guys, see you in the next video.